I start by taking a look at what the market's expectations are for the stock. And you could do that with, I got the idea from reading a lot of Michael Mauboussin's writings. And he talks about the market implied competitive advantage period. And what you want to do is you want to build a DCF model, and you want to go longer than most people do. Most people do it, about 5 years is kind of the standard. But you want to go longer, and what you want to get a sense for is how many years will it take the company to earn. How many years will it take for 100% of the company's value to be built into their net cash debt position plus the stream of earnings? That gives you your base case scenario for what the market's expecting. And then you want to think about how right it is. You want to think about the different ways that it could go right, the different ways it could go wrong, and you want to think about the magnitude with which it could go right versus the magnitude with which it could go wrong. You want to ask yourself, is this an all or nothing situation where either it'll be wildly successful or worthless? Those are frightening situations, but you could quantify those, and you could construct really just a probabilistic weighting of the odds, assigning probabilities that are grounded in looking at as many historical examples as you can of what's happened in a given situation, looking at what the other possibilities are from competition, and looking at the market size of the opportunity. So one of the things that with IMAX I think is particularly helpful is you could run through scenario analysis of how much of the box office they capture. And it's both exciting and it's scary, because right now really they capture 1% of the global box office, if that, which is really nothing. So for them to double their market share wouldn't take much, and you could think about if they double their take of the box office, where would things be? And it's really running these iterations, running through as many different scenarios as you can, and stacking them all up to a weighted probability.